welcome to another episode of In Conversation. The guest this time is a special guest, Rahul Shukla, our Group Head, Corporate Banking and Business Banking. Coming to Rahul's background, this is extremely haloed. I mean, I'm reading out from his LinkedIn profile, and he's an IITian. IIT BHU is what we used to call him back then. Now it's IIT Varanasi. He's gone to IIM Bangalore. Amazing career so far. The last, he's been a very long city banker where he was managing director, the head of corporate banking South Asia. That was his last, the role there. So amazing and very impressive background, Rahul. So welcome to the show, Rahul. Thank you so much for taking time and agreeing on being on the show with us. Like I said, people have a view. I mean, they have a certain image of a corporate banker. So for the benefit of them, would you like to just tell us what does a corporate banker do, and why and how does he look any different from a normal banker?
Neeraj, thank you for inviting me for this episode of In Conversation. Very glad to be here. Very grateful to be here, sharing my views for over 100,000 people in the bank across the country who continue to work during these, trying times, and to just the stakeholders at large. Let me put it this way. Everybody has a view about a corporate banker, but the job is pretty different. It is not just the glamour that you think about. Think about a spy, right? And we see all these movies, and then there are these great, exciting things that they do. But on the back of all of that, they do a lot of research and a lot of, basically tedious or detail-oriented work, which is not glamorous at all. You must have seen the spy Ali Cohen in Netflix. You would have seen that movie about where they hunt down Osama bin Laden in Afghanistan. And I think, the background work is very tedious. So if you look at corporate banker, I think obviously it is you need a person, I always say, with normal common sense. And while it is, quite obvious, but it is not always available. Beyond that, you have to like to meet people, because our job is to meet people, and you should genuinely like to do that, and they should, like to meet you. But that is where the external facing, work stops. And when you come back home, into your bank, premises, you should be a person who should be ready to, go through a annual report in fair amount of detail. You should be willing to read, the notes to the accounts in a fair amount of detail, because most of the ideas, the business ideas that you talk to, clients about, that is all embedded in those things. You just have to read a lot. You have to read, basically things that are, not so interesting. And that is what a corporate banker is made out of. He or she is supposed to be a generalist in pretty much everything in banking, but they are not specialists in any specific thing in banking. They are the bank in many respects that I say, because a bank is what? It is a building in which you are sitting, and the bank is defined by the interaction between this building and the customer. And the corporate banker, at least on the institutional side, is that link which links, the bank's building with the customer. So that is, the bank for the outside world.
Wonderful. Rahul, how's been the journey? I mean, you joined us in 2018 March, is what I remember, and it was celebration time, and all of us had felt terrific about this. That, Rahul Shukla is joining us. You've made a name for that yourself. How's been the journey here, Rahul, the last couple of years?
Neeraj, let me put it this way. If you're a banker and you want to be a banker in India, you need to be at a place which is moving. So you want to be in that place. The fantastic thing about a bank is that there is a growth mindset. Everybody, has still lives in the value system that we just started. And I think that the head office being so small contributes to basically that feeling that when you walk in, you are not overawed by a big building, and you don't think that, oh, I'm such a big bank. When you come in, all the group heads are sitting, you still basically feel that it's a small, camaraderie. You walk around, you solve, the problems for the pursuit of growth. And, I mean, I can say that, okay, am I a vain person that I am pursuing, growth? And that's absolutely not the case. As we pursue growth, we push out, more credit into the economy. That supports GDP and that supports a huge amount of upliftment of people, from below the poverty, segments, right? That is how banking sort of goes out and works. So it has just been an amazing journey. And my only disappointment is that I've been around only for slightly over 2 years. And I see in Mr. Puri a great teacher, in banking industry because he's trained so many people. And I often say that, look, he's trained so many people in 25 years. He's like the Guru Dronacharya. And I have only a 2 year stint, which is like, so you have the Treta Yuga and you have the Dwapar Yuga, and there are, people who define it. The modern day banking industry in India is defined by Mr. Puri, and he is the Yug Purush. And to be around him and to learn from him, for somebody who wants to pursue, banking, there cannot be a better teacher or a better training.
Rahul, interesting. You spoke about the qualities of the traits that Mr. Puri, brings. So related to that, one question is: having been under his tutelage and for the last 2 years, and then absorbing from him some leadership lessons that you would have kind of garnered or acquired. Would you like to touch upon that, please?
So, Rajiv, let me put it this way. We've seen a lot of leaders in our lifetimes because we've done fair bit of banking, for several years, right? You've seen different leaders. There are those who go out and look at financials, and if they are, doing fine, they say great. If they're not doing, fine, they put a little bit of pressure, whether they with a smile or with anger or whether pretended anger, etc. Right? That is a style of leadership. But when you look at Mr. Puri, he has never come and asked saying how the financials looking, how is it going, and I find that very amazing. At quarter ends, when banks are busy trying to, make sure that the business, basically fully booked, everything is done. Oftentimes, I find that he's not even in Mumbai when most bank CEOs would be in their respective head offices, right? And that's pretty amazing. And he always gives you a guidance which allows you to go out and surpass, what you thought you could achieve. So if you look at that leadership model, it has parallels if you follow Ramayana, right? Lord Hanuman had to be told as to how capable he is because he never knew. So for a leader, you have to just make sure that your team believes that they can do beyond, what they think that is possible. And when you do that and you have everybody basically, fully pumped up and empowered, you've set a strategy, everybody buys into this strategy. You don't really have to do much. The results automatically come. And I say, take for example oil refinery. You have pipes, you have gauges, you have pressure gauge, flow gauge, etc. You have input on one side and you have output on the other side, and you don't know what happens, inside the pipe, etc. So long as you keep checking that the pressure is fine, flow is fine, viscosity is fine, the output will be automatically all right. So you need some gauges to keep checking as to how the oil is moving, which is business. And that's all that you need to do. So in summary, the role is to basically go out and inspire your people, to make them believe that they can do even better than what they thought. Back them up, during the toughest of the situations. And thirdly, just keep monitoring on an ongoing basis through your systems as to how the business is going, so that you can take a corrective action as quickly as possible if you find something is not going as per plan.
And Rahul, permit me to do so. This salt and pepper look of yours, let's say, once things come back to normal, would you still want to kind of retain it because it adds a bit of a funk, and then you're trying to redefine how, let's say, a typical corporate banker looks?
in our journey, we have all the socks that you wear, or the brand of the suit that you wore, the type of tie that you wore, etc., and so on, right? But step back. You are going to a client, and you are basically offering your services to the client, and the client has a problem or a need, and you try and fit that. The client never buys an empty suit, right? Which is no substance, just the exterior. The client at the end of the day is looking for content and looking for solidity and your ability to move your organization. Banks are very difficult to deliver on a platter to a client. And if you work in a very large bank, you will always, basically realize that. So you have to offer the entire bank, to the client. And that's what they are looking for. So beyond the introduction and the sophistries, what matters is content, and doesn't matter, what the look is. That is how I feel, and I always tell the juniors saying, look, don't try to be somebody else in front of a client, because after 3 interactions, the client knows that you're somebody else. Because some people try an affected way of talking, some people try to be somebody else, which they are not, and you just have to be very comfortable with your own skin. As to the beard, I think this is I never sported a beard, and the mustache is back after 30 years, and I thought in lockdown maybe it's a good variation that I could do, because nothing else was changing around your place of habitat. And so this is, something you could do, and it's open to question whether I retain it, post lockdown, or I get rid of it. But for the moment, it's there.
Corporate banking and business banking are the two large businesses that you oversee. One, are they intrinsically different from each other, and are they called for their, do they require different skills, or it's more or less the same and one size fits all, and you go and you're able to deliver at both these places?
So this question has been asked to me quite a bit, and let me put it this way: if you want to complicate things and say they are different, then they are different. If you want to keep things simple, then they are intrinsically the same. For example, if you go to a children's park and there are different kids, who are playing around, and you would say one is tall, one is short, one is slightly more plump, one is skinny, one is fair, one is dark, and so on. And you can make those determinations, but at the end of the day, they are growing children of the same race, which is Homo sapiens, and they are all growing together, right? That's pretty much how I look at it. And that's how I look at both corporate banking and business banking. Yes, we have verticals because there are different sizes and different needs of clients to go out and take care of. But what essentially are we doing, with the client? We are offering them banking services. We are offering them credit facilities. So to that extent, we have to go out and analyze the credit. And we are looking at meeting their entire life cycle need. Now, when you say a life cycle, again, I take the park example. You have kids who have a different need in a park. You have the elderly who would want to sit and just enjoy, the breeze. You have the older people who are contemplative, and you have all sorts of people. And this is just a different cycle of the life cycle of a human being. So when you are a small customer, in terms of just inception, that is where you fit into business banking, and you will, have a sort of, dealings with them. And when you are a little bit more mature, you are a corporate banking customer. But if you step back, fundamentally, the things that we do are pretty much the same. Yes, you can say that, look, in corporate banking, you can lose, if you haven't done your work carefully, larger sums with less number of customers. But in business banking, you can lose smaller sums, individual ticket, but across a large number of customers. Corporate banking could be only in a few large cities. Business banking would spread across the 700 and each one of the 730 districts in the country. So I, for one, take a view that it's a different life cycle of a corporate, different needs of a corporate. The large corporate has great bargaining power because of the amount of buying that they do of banking services or anything else. The smaller guy is promoter driven, who's very cost conscious. So he's again very focused in terms of the services that you offer, the value proposition versus the cost of those services. So each one of those is equally challenging. So I don't make that much of a differentiation. And I think the younger, go-getters, the hunters, they are out there in business banking, and the natural career progression for them as an RM where they join business banking is eventually to become an RM of a corporate banker and then come back to run a unit in business banking and go back to corporate banking. So that is how it keeps switching. I don't know whether I've answered your question to your satisfaction.
You have.
That's how I look at it.
Last 2 years journey, how would you want us to, how do you yourself look at the journeys? And these are two different journeys that you've had. How have the books shaped up? Anything interesting that you may have introduced, and that's something that you would like to talk about here with us?
If you step back and see business banking, which a lot is written about today externally and talked about, that is a business which is fundamentally a very solid growth business for the bank. There are different principles that we deploy in terms of risk management, the collaterals that we look at it, which is effect of risk mitigation, so to say, and we try and drive both of those businesses. But yes. If you are in business banking, you always have an identity crisis, whether you're running a retail business model, a retail banking, or you're running a wholesale banking business model. At the end of the day, the only thing I can say, during my tenure is that both of the businesses, corporate and business banking, have run exactly the same way. It's a copy-paste style. What is working in business banking, gets transported to corporate banking and vice versa. And so therefore the characteristics, how we look at the business, how we look at risk, how we look at growth, it is fundamentally very, very same.
So you're making it look as if it's a cakewalk, which I'm sure it's not. It's humility, it's your simplicity, and the way you look at simplistically the way you look at things around. You would have had challenges, right? I mean, you would have challenges. Challenges would have got pronounced perhaps during the lockdown. Would you like to talk us through the challenges?
Neeraj, before the lockdown, COVID was coming, and it was coming. Everybody knew it. So, as a manager, what do? Your first, response is to basically protect your people. And around middle of March, we said that we are going to operate with 50% of our capacity because we wanted to reduce people density. At that time, we didn't have guidelines, but we went out and implemented that around our entire people base. And the moment the lockdown began, we said no one could go out and enter the office. And there were a lot of creative arguments that were given that my laptop is not working, this is not working, I want to go, I want to reset. And we got IT teams who were wonderful and brilliant to go out and help with just remote troubleshooting, and everything got solved. And whenever people would come, I would say that, look, if you want to run away from your spouse, find some other reason. Don't use the reason of the bank to go to the bank. But that was the first bit, that you have to go out and protect people. That is very important to me. And that was first. The second was to go out and protect your franchise, which basically meant that at that particular point of time, on 24th or so of March, it was the year end. The transactions are highly intense, and there were no people because nobody was allowed to come into the office. It was also the month end, which is where salaries and bonuses get paid, and you had to go out and do that. So now there are many customers who are not, completely on digital, and you had to run it, basically on a file basis, on email. Yes, you will go out and do that, but these are prone to errors, and that impacts the franchise of the bank. So you have to go back and look, okay, what protections you had in terms of, indemnities, what were the checks that we were doing, if there were two signatories and only one person can send an email to you, what were the callback procedures that were put in place. And the bank was just absolutely fantastic. Our operations team makes you proud because they are the ones who give the tailwind to the RM who then goes out and looks very smart and very good in front of the customer, right? So the bank
Right.
came out, pretty well through that particular phase. The third was the ongoing building up of the business. So we had a intense, March quarter. We had a great March quarter, and then you move to April, and you're in HDFC Bank. It's like a bullet train which keeps moving, and you had to increase your customer engagement, and we had to go back and do non-traditional ways of customer engagement, right? You were never used to doing video calls with a customer. When you go to a client, if two or three people go to their office, you can be less attentive and get away with it. But when you are on a VC, you are looking at the client and you're looking at every single twitch of the eyebrow or body language. And so you're reading, the client's face, and so is the client doing to you. So you got to be a complete master of the subject that you're dealing with. You are more focused, and it has just been in the last 3 months, I think, a great opportunity for RMs to go out and upgrade their skills, because it has taught us a lot to operate digitally, to be more solid. The client meetings are more effective. The clients are also sitting at home, so we are having far more number of client meetings than you would normally have physically. And lastly, look, the RM is a relationship manager, and today he or she does not have a Saturday, he or she does not have a Sunday, because at any point of time a client has the freedom to go out and call you, and you have to go out and attend to them. But these were the learnings: more focused, client engagement, more usage of digital processes which are out there in the bank, but for your personal use. And thirdly, to manage work-life balance better, because suddenly you were with your family who are not used to you being around all the time, and you had to relearn on how to manage those dynamics better.
A lot of these learnings, do you see them getting, being continued post lockdown? A lot of these meetings, client meetings, and all that happening on again on video calls and all that. It's like really important for me to sit in front of the client.
Meeting the client is a very important fact of the job, and once you know the client, then everything falls in place. However, given that we are the largest private sector bank and we are the second largest bank in the country, there is also an institutional relationship between the bank and the client organization. So yes, we will have physical meetings, but we will also have a lot more video meetings, which the client may also prefer, because it just provides them greater flexibility in terms of managing your daytime. Secondly, we learned through the lockdown that we can be more productive, but we can also have a better work-life balance. Are we going to give that up? I don't think so. Neither would the client. So this is, here to stay. If you look at just our digital payments that have been happening, that has grown pretty dramatically. And there is always that push required to go completely digital. Because at the end of the day, in every nook and corner, you have an HDFC Bank, and there would be a banker who would come to the client's office, pick up all the physical papers and go out and process it. Of course, they would do that digitally in the branch. But there is always that inertia to go completely digital because the bank is around the corner. But that has dramatically changed, and I don't think we are going to go back. Thirdly, do I really need 100% of the people coming to office? The productivity was better in June quarter compared to prior quarters. It continues to remain pretty good while we are at home. So obviously, there will be a greater percentage of people who will start attending office, but we don't need to look at management the old way. That there is, a gatekeeper who's standing with a big clock where the seconds are ticking away. and everybody is trying to rush in and punch their cards so that they make an attendance before time and do not show up as a late attendant. So I think it is here to stay. Things are going to be very dramatically, and they're going to be very, very dramatically different for financial services industry in India, where larger and larger proportion of work from home will happen as you see it. And the travel at the drop of the hat, which we do across cities, I think that also
That
is
will
going to
change.
reduce
Yeah.
because there is no need. This is what the pandemic has taught us.
You spoke about approach, you spoke about background research and the aspects that needs to be done in your job. Is the approach any different when it's say comes to let's say working with a conventional traditional company vis-a-vis let's say a new age company or a sunrise sector company or a e-com company?
To the question on how do you look at the new age versus the brick and mortar businesses, think about this. All the new age businesses may not have a lot of physical assets, but they have huge market capitalizations. And then there are those traditional brick and mortar businesses who have huge brick and mortar assets, but their market cap is low. At the end of the day, all the companies are defined by a value that they bring to their customer base. When we look at both of these businesses, and particularly when you come to extension of credit, you give credit to a person where you are pretty sure that the credit, comes back to you or the money comes back to you, right? And so therefore, our philosophy is that we look at the cash flows of the business and we then go out and extend credit. If you don't do it that particular style, you will then have tales of tears and a lot of stress and a lot of non-performing assets. So fundamentally, when you look at extension of credit, there is no difference. Yes, the new age businesses will have a slightly different service requirement, more digital, more straight through, and you have to have the platform to be able to service that, which we have, because these are new businesses with small amount of manpower. They expect you to do a lot more grunt work. Now, if I do all the grunt work physically, then I'm going to hire a lot more people, and then my cost to income is not going to work out. And so therefore, you have to have a digital mindset at your end to be able to take on the volumes without just increasing infrastructure at your end, so that it pans out pretty well for you and you are competitive in terms of offering your services at reasonable costs to the new customers.
A lot of times you have to hear that the bank is a retail bank. What do you have to say to them? Is it the fact that some of our peers have had let's say lineage in the what was called earlier DFIs. So maybe they don't suffer from this. But is that the reason or something else? And how do you react to this?
Neeraj, I go back to the park example, and I say that the kids are segmented basis, what we have in mind. And I think you can segment retail and you can segment wholesale. These are different customers with different characteristics, and banks do that to be able to reorient services that they provide to a customer base better. It is the two sides of the coin, the two engines which powers the bank. And when retail has been slightly slower, wholesale has come out and supported in terms of the growth of the bank. And in the past, vice versa. And that is going to continue. Now, you, Neeraj, as an individual, have a certain banking need. And you, Neeraj, as a officer of HDFC Bank, may have, as a corporate, a different business need. I think we have a unique platform that is able to address both the Neerajas. The Neeraj, the corporate man, and Neeraj, the consumer man. And that is the strength of the bank. And that is why we have seen more and more customers as individuals and also as corporates come to us for more and more services, which is what we are seeing. And it is up to us to go out and meet their expectations. A lot of hard work behind the platform, and the platform is what makes the bank pretty successful.
Wonderful. So we indeed covered a wide array of topics, and we got to know Rahul Shukla, the person. We've always known him as a banker. Fascinating discussion we've had. I'm sure I enjoyed it. All my colleagues did on this call, and the viewers will enjoy it too. And thank you so much, Rahul. Thank you.